Welcome to Bayanat, the heartbeat of tech in MENA. We bring you raw stories and sharp insights from the founders, investors, and leaders building the region's startup ecosystem. Today, we're embarking on a deep dive into Zest Equity. It's a company that's, well, rapidly becoming a really critical foundational layer for private market transactions right across MENA. Our mission here is to understand the remarkable journey of Rawan Badour, its co-founder, and figure out how she's tackling some of the most persistent challenges in the region's burgeoning private sector. So for you listening, whether you're a founder striving for efficiency, maybe an investor navigating complex deals, or, simply keen to understand the financial infrastructure of emerging markets, this deep dive should offer some crucial insights. Insights into how private markets are being made more accessible, more efficient.
Yeah, it's really clear that a solution like Zest Equity is not just timely, it's pretty essential right now. Private markets globally often struggle with opacity, with illiquidity, and that problem is really amplified in rapidly developing regions like MENA. So what we'll do is trace Ron's unique path, unpack the core problem Zest Equity was really built to solve. Look at its crucial evolution, from a simple marketplace concept to this indispensable infrastructure layer it's become, and explore its, frankly, bold ambitions for the future.
Okay, so Rawan Badour's background sounds like it was really key to what Zest Equity became. Could you maybe walk us through her early journey? What were those pivotal experiences that really sparked her entrepreneurial drive?
Absolutely. Look, Rawan is, at her core, she's a builder. Her story starts in Jordan, and it seems driven by this deep love for problem-solving, math, economics. She even describes studying quantitative economics in Boston as, and I quote, one of the toughest things I've ever done, which, really speaks volumes about her rigor and determination.
Yeah, definitely.
Her career then took her through economic policy, public sector development, and then this quite unique role at a Jordanian bank. There, she was bridging strategy, governance, operations. And this seems to be where that entrepreneurial spark really ignited. She recalls, I loved taking a process apart and putting it back together.
Ah, yeah.
That drive, to deconstruct and rebuild stronger processes, build from the ground up, that translates directly to the needs of a nascent but fast-growing market like MENA's private sector.
So it's not just a founder story in isolation. It's really about applying these deep skills to a systemic market problem. And her later experience is just built on that, right? The MBA, the DIFC.
Precisely. Her MBA in Madrid, and then crucially, 7 years running an investment firm right there in the Dubai International Financial Center, the IFC.
Yeah.
Those were critical building blocks. That time gave her deep, hands-on expertise in regulation, compliance, stakeholder management, all absolutely essential knowledge for what she eventually built with Zest Equity.
Okay, that makes perfect sense for tackling complex financial infrastructure. And then it sounds like that entrepreneurial itch, as you called it, came back pretty strongly. What actually triggered her return to building? And what was the specific problem she and her co-founder, Zuhair Sharma, zeroed in on?
Well, Rowan basically felt that need to get back to building something from the ground up. And around the same time, her childhood friend, Zuhair Sharma, who became her co-founder, he was really voicing his own frustrations. He was an active angel investor, had a strong portfolio, promising startups, but he faced absolutely no viable path to liquidity for his smaller stakes.
Right, the classic angel investor problem.
Exactly. Secondaries, especially for those smaller ticket sizes, were just a nightmare. Prohibitively expensive, tangled in governance rules, bogged down by endless board approvals. It was messy.
So Zuhair was feeling the pain of illiquidity firsthand. How did Rowan's sort of global investor perspective add to that picture?
Well, while Zuhair was dealing with the practical headaches of a locked-up portfolio, Rawan, looking at it from her global investor lens, saw the bigger systemic issue. MENA's private markets were incredibly opaque. Opportunities were often stuck within these tight-knit insider circles. Getting reliable performance data, verified information, almost impossible. And this is, like you said, a classic founder's pain point story. It highlights the real struggles many of you listening, founders managing cap tables, investors seeking efficient exits, might have faced navigating these complex, often very manual private markets. It was a market just crying out for a better way.
Okay, so they had the problem clearly defined. And that better way initially looked like, a straightforward marketplace for liquidity. Connect shareholders wanting to sell with investors wanting in. Sounds logical. But what was that critical insight they got from the market pretty quickly that shifted their whole approach?
Yeah, the initial vision was logical. A platform for shareholders to cash out without messing up future fundraising. And investors get access to verified data. Simple enough, right? But as they started talking to founders, pitching this liquidity marketplace, they uncovered something surprising. Most companies didn't actually need Zest to find secondary buyers.
Oh, interesting.
The real challenge, the thing causing all the friction and cost, was the execution itself, getting the deal done. Founders either didn't know how to process secondaries properly, or they found the legal and operational overhead just way too expensive. In fact, many started asking Zest if they could just use Zest's internal tools to manage their own deals.
That's fascinating. That's where listening to the market really becomes crucial, isn't it? Rawan mentioned finding that balance between listening and, sticking to your vision. How did that feedback land across the wider ecosystem?
It landed with a bang, really, because it wasn't just one or two founders saying this. The feedback was consistent right across the board: family offices, PEs, founders, VCs, angel investors. Everyone was voicing the same frustrations about how manual, costly, and just plain cumbersome executing private market deals was.
Right.
So this pivot was really a testament to Rowan's point. You have to listen to the market, but you also need a little stubbornness in your vision. The trick early on is finding that balance. And Zest pivoted quickly, evolving from just a venture-focused platform into this asset-agnostic infrastructure layer.
That's a really significant shift. So now Zest isn't just about VC deals. It powers primary and secondary transactions across VC, private equity, even real estate, handling the execution, SPV creation, compliance, workflows behind the scenes. So how does Zest actually become the pipes for these transactions? What does that look like in practice?
Okay, so becoming the pipes means Zest essentially digitizes the entire transaction execution workflow. It brings all the different stakeholders, buyers, sellers, the company, lawyers maybe, onto a single platform. This streamlines communication, creates transparency, key features, things like full access to all the relevant documents right up front, plus embedded institutional-grade AML, KYC, all the necessary compliance checks.
Anti-money laundering, know your customer. Got it.
Exactly. It basically handles all that crucial identity verification and regulatory stuff in one efficient process.
So if you're a startup founder, how does using something like Zest prevent those unpleasant surprises you sometimes hear about later down the line, especially during fundraising?
It's all about getting your house in order early, proactive governance. This digitized process allows for seamless co-investments, makes onboarding new investors much easier, and crucially, it helps prevent those nasty surprises that can pop up during stricter cap table due diligence later on. When potential investors are really scrutinizing who owns what.
Right, cleaning up the cap table.
Precisely. So imagine you're a startup wanting to clean up your cap table, maybe roll lots of small angel investors into a single SPV before your Series A or B. Or maybe you're a family office bringing in co-investors, or a VC running co-investment vehicles side by side with your main fund. Zest simplifies all these complex processes. It helps build that clean, auditable foundation right from the start. That's really how it became the pipes, by being asset agnostic, focusing on the tech, the infrastructure.
That level of transparency and streamlined execution, it sounds invaluable, especially, as you said, in a region where building trust is just fundamental. How did Zest manage to establish that credibility early on in a market that really runs on trust?
Yeah, you nailed it. In private markets, trust isn't optional. It's just the reality of how business gets done. Zest understood that early adoption wasn't going to come from hard selling. It had to be built on credibility. Rowan put it really well. We weren't asking clients to take huge risks. They were going to run their transactions anyway. We simply offered a cleaner, more streamlined way to do it. Low-friction adoption. And the founding team's chemistry was also pretty key, I think. Rowan's corporate background brought that structure, that institutional discipline. Zuhair's investment banking experience brought speed, agility. That balance created something innovative but also felt safe.
And it wasn't just the team dynamic, right? The actual processes they implemented had to be rock solid from day one.
Absolutely. They built it with institutional-grade processes baked in from the very beginning. That meant partnering with top-tier structuring lawyers, getting leading law firms to vet their legal frameworks, working with seasoned administrators, really ensuring the highest standards of governance and compliance were met. It was this meticulous approach, combined with that low-risk entry point for clients, that built the initial trust and really fueled word-of-mouth referrals.
That focus on robust institutional processes sounds like it paid off. Now, Zest initially focused on deals around, $100 million or less. Why target that specific middle market segment? What was the gap there?
That segment is absolutely critical. Because whether a company's raising, say, $4 million or $100 million, they often face very similar operational challenges. Coordinating stakeholders, handling due diligence, KYC checks, managing communications. It's complex, regardless of size.
Right.
Now, for the really huge transactions, you usually have big institutions, investment banks managing all that. But for those smaller middle market deals, those resources often just aren't there. It leads maybe the founder or lead investor trying to juggle everything manually, often inefficiently.
Okay.
So Zest's mission became bringing that institutional-grade governance and streamlined workflow down to these underserved transactions. The goal was to significantly cut down on the operational headaches and, importantly, the legal expenses associated with just getting the deal done.
So Zest helps democratize the operational side of things. But just to be clear, it's not replacing the lawyers, is it?
No, absolutely not. It's a key distinction. Zest complements legal counsel. It doesn't replace it. The lawyers are still crucial for negotiating terms, drafting the key documents, safe notes, shareholder agreements, all that critical legal work. What Zest democratizes is the operational infrastructure. Things like setting up the SPV efficiently, managing it ongoing, handling document flow, compliance checks. It makes the execution part affordable and scalable, but it operates strictly on instruction from the deal parties and their legal advisors.
That sounds like a really flexible and needed solution. Initially, you said VC investors were the main early adopters. They ran the first, 60, 70 deals on venture assets. How did the platform's design help it expand beyond just VC?
Yeah, VCs were definitely the first movers, but the platform's design, flexible yet standardized, was really key to its expansion. As trust built up and the wider market started to understand the value Zest offered, it just naturally started moving beyond only VC into more traditional asset classes. Private equity, real estate deals started coming onto the platform.
Makes sense.
So today, Zest serves this incredibly diverse range of clients. Family offices, PE firms, startup founders themselves, VCs still, of course, angel investors, people running investment syndicates. Essentially, anyone who's running a private market deal can become a client. Zest steps in once the main terms are agreed and streamlines the execution, the compliance, the communication. It really shows how broadly applicable their solution is across the whole MENA private market spectrum.
That broad applicability really speaks to the strength of their core offering. Okay, looking ahead, Zest recently closed a pretty significant pre-Series A round, right? $4.3 million in April 2025. Led by Prosus Ventures, participation from Morgan Stanley's Inclusive and Sustainable Ventures Fund, alongside existing investors like MEVP and Dubai Future District Fund. What's the strategic thinking behind that raise? What's the plan?
Yeah, that raise is critical for their next phase. The main purpose is really to fortify that infrastructure-first strategy. It's about attracting top talent, significantly strengthening their systems, their internal processes, their governance, basically getting everything ready for serious scale. Their ambition now is huge, to become the default transaction execution layer for private markets across the entire region. They've even set this incredibly audacious goal to ensure that, and get this, 80% of limited partners, LPs in the region, have executed their transactions on Zest within the next 3 years.
Wow, 80% of LPs using their platform in 3 years. That is ambitious. What are some of the biggest hurdles you see Zest facing as they try to scale to that level, especially across MENA's diverse markets? And what's the ultimate global picture here?
Well, scaling across diverse markets always brings challenges, right? You've got different regulatory nuances to navigate in each country. Ongoing market education is needed. But Zest's asset-agnostic, tech-first approach gives them a really strong foundation to build on. Their bigger vision, beyond just regional dominance, is to be the pipes behind every deal. Starting with SPVs, yes, but then expanding through new digital tools, maybe regulated products down the line. They see MENA as the starting point, but the plan is eventually to scale into similar underserved markets, think Asia, maybe parts of Europe, truly becoming a global infrastructure player. Ramin herself summed up the journey well, noting, "It never gets easier. The more you grow, the more complex it becomes. But the foundation you lay on day one is what determines your success in the years to come."
It's definitely clear that Zest Equity isn't just building another fintech product. They're constructing some pretty fundamental infrastructure that could genuinely reshape private markets. So here's a thought for you to ponder as we wrap up. As Zest really pushes to become the pipes of private markets, what fundamental changes could this bring? How might it affect the way global capital flows into and within emerging regions like MENA? And maybe more profoundly, how could it reshape the role of traditional financial intermediaries over the next decade? What an incredible deep dive into Zest Equity's journey. From really nailing those critical pain points to building this essential, trusted infrastructure for MENA's private markets. Their evolution really speaks volumes about listening to the market and building for real impact.
Indeed, it really highlights how foundational tech like Zest can do more than just streamline processes and cut costs. It can foster greater transparency and ultimately potentially accelerate regional economic growth by making private capital flow more easily and efficiently.
For more stories like this, subscribe to Bayanaut's newsletter and stay updated on the latest in MENA's tech and startup ecosystem.